Hi, good evening, one and all. In the last class, we had seen the which are those basic concepts of the accounting. Okay, so in the last class, we discussed what in my business entity concepts, what in my money measurement concepts, what in by going concerns, or what in by dual aspect concepts, revenue recognition concepts. Okay, so matching concepts, accrual concepts, what in by objectives concepts. Okay, so these concepts we discussed in the last session. Okay, so in this session we will see the which are those important accounting conventions. Okay, so the basic terms are the difference, basic concepts are the difference, and the important accounting conventions are the difference. Okay, so now this, see, the first one convention is what's conventions of full disclosure. What the convention of full disclosure? So it means all material and relevant fact concerning financial performance of an enterprise must be fully and completely disclosed in the financial statement. Okay, so it means whatever the transactions are taking place in the business. Okay, so these transactions are recorded in the books of the accounts, and after recordings, while preparing the financial statements, in that finance statement it should be disclosed. Okay, it should be disclosed. It will be useful for the this whatever the material, accounting material, it will use for the users. Okay, that may be the internal users or that may be the external users. Okay, so whatever the economic data is there, whatever the financial data is there, that should be disclosed to the users. Okay, so to the internal users or that may be the external users. Okay, so this is the convention of full disclosure. It means what's the financial statement disclosed to the disclosed to the users. Okay, so this is nothing but the convention of full disclosure. Next one is the what's convention of consistency. So now what it indicates, the accounting practice and methods should remain unchanged from one accounting year to another accounting year. Okay, so it means what's convention of consistency means what's, so while recording the transactions in the books of accounts, so the accountant using some principles, okay, as well as the accounting standards is using, as well as the depreciation methods is using. Okay, some rules and regulations is using while recording the transaction in the books of accountings. Okay, so suppose in this year if it is used, so the whatever he used the methods, the next year should be used in that method only. Okay, so this is what's the consistency. What this is the consistency. Okay, so it should not be changed year by year. It should be same year by year, whatever they are using the methods or the principles as well as the rules and the regulation, or you can say the accounting standards. Okay, so what is the depreciation methods? There are so many depreciation methods are there. So if it is used in this year the state method, then it should be used in the next year also. Okay, so this is what's the convention of consistency. Okay, so the next one is a what's convention of conservatism. Okay, convention of conservatism. So it means what's that the convention of caution or the policy of playing safe, that is, in the accounting records and the financial statements of a business, all the prospective losses should be taken note and provided for, but prospective profit should be ignored. Okay, so it means what's convention of conservatism means what's all the anticipated losses should be recorded in the books of account, but some anticipated incomes or the revenue is not recorded in the books of the accounts. It indicates by the convention of the conservatism. Okay, so conservatism means all the anticipated losses should be recorded, but all the or some anticipated income should not be recorded, or it's ignored. Okay, to record in the books of the accounts is nothing but what the convention of conservatism. Okay, so next one is what's last one, fourth one, convention of materiality. Okay, convention of materiality. So it indicates what's in accounting a detailed record is made only of those business transactions which are material to the users of accounting information and trivial transactions are ignored. Okay, so it means what? So whatever the transactions are taking place in the business, okay, so which are those important or which are those material. So material means what's important or the significance. So these significance transactions are recorded in the books of the accounts. And trivial transactions, the trivial transaction means what's with it means what, which is not important or which is not significant transactions are ignored. Okay, so materiality means what, which are those important or which are those significant transactions are there. So these transactions are recorded in the books of the accounts. So is nothing but what the convention of the materiality. Okay, so what do you explain the basic concepts of the accounting, it will come for the 5 marks, or they will ask explain the conventions, important conventions of the accounting, they will ask for the 5 marks. Okay, so both are very important, otherwise they will, yeah, they will ask what in by materiality, what in by conservatism for 2 marks. Okay, so I hope you will understand. Okay, so just prepare it. Okay, thank you.